Yes, you read that correctly. I passed my FTMO account with a 100% win ratio. And you can do the exact same thing by just copying me. We'll go over all the trades I've taken so you get a deep dive into multiple of my trading strategies, and we'll go over my risk management strategy to pass these prop firms quickly and safely. For trade 1, we got multiple bearish arguments, which are the SMT at the yearly highs between EU and GU. GU has clearly swept it while EU failed to do so. Then we confirm this SMT with my algorithmic change in state of delivery, which is this candle right here. And you might be wondering, why are we not picking all these up close candles? And I'm marked it in red, and we'll circle back to this. So keep this false change in state of delivery in mind. And all these candles closing so strongly beneath the preceding candle indicates to me that we are likely to continue this bearish train until I'm proven otherwise. Because what are the odds the price opens up, comes all the way back to previous month's high, then drops, instead of just taking this previous month's low right here and then potentially continuing or deciding if it wants to reverse. So with all these confluences, I am looking to target these beautifully engineered monthly lows as my drawn liquidity for this trade. On the weekly, you can clearly see the reason why I took the highest candle as my change in state of delivery, because it is the strongest algorithmic pattern, which is the unicorn. Price had rebalanced this tiny fair value gap, swept these highs, so this phase of price delivery is clearly done, as we then have broke strongly under this low. Everyone that longed from that fair value gap is now a trapped trader. And if you don't understand what I mean, you can imagine people longing from fair value gap trying to target all these highs. But because price has reversed so strongly into them, we won't revisit that area. If price comes back up, then all these people can exit at a break even, but we want to give them max pain. This is why these are the most explosive moves ever. And we can also clearly see price dropping from internal range liquidity to external range liquidity towards our drawn liquidity. And the most obvious beautiful thing was this weekly SMT right here, but it was between EU and DXY, which you can see on the right hand chart. And you might be wondering, Oscay, why is your DXY inverse? It is just because it's easier on my eyes. On the daily time frame, we have another one of my favorite algorithmic patterns, which is a SMT inside of a key level, which is the daily fair value gap in this case. And remember what I did on the monthly to the weekly? You can do the same from the daily to the H1. That's some inception, which you will see in a bit. And it has such a high win rate, so please test it and it will change your trading for the better. Like, don't you want to catch the same moves as me and get the same demo money as me? So test it. So let's repeat what we have just learned from the monthly to the weekly change in state of delivery. What would be that right here? Clearly, it will be under this low. And once we zoom into price, you will see why. We'll also be using the previous daily range to confirm our sentiment. So if we want price to drop, obviously we would not like it to come all the way back up here, because then it potentially can reach this high before dropping. We want to see price stay under here and then drop to our drawn liquidity. Now we have dropped down to the hourly, and you can see the thing that I've just marked aligns beautifully with the breaker. Where do we drop from? The breaker. So what confirmed our high of the week? The algorithmic change in the state of delivery with the SMT. Note that down. And if you just focus on these two things, it will change your trading. Like, you can rinse these prop firms every single week, payout after payout after payout after payout. But demo, obviously, this ain't financial advice. So where did I then enter towards our drawn liquidity? It was right here. You might be wondering, Oscay, why would you enter right here? We have not swept Asia highs. Again, SMT. We have SMT against DXY. DXY sweeps this high while EU and GU fail to do so. That is a cracking correlation inside of a key R, which is the 2 a.m. candle right now. And you guys know I love trading the 3 a.m. candle. Now let's mark the opening price of that, because we want to anticipate the creation of this candle. When price decides to distribute down, it has to manipulate up first. So we want to see price go up right here, drop, then we entry, and then it continues dropping, and then price will close like this. It'll look something like this. Look how I confirm this SMT. I want to see price drop under here. Bang. We have our unicorn pattern. We have manipulated above 3 o'clock. Now we want this expansion phase to happen. So I just put my limit on the breaker. I target 2RR. Bang. Instantly 2R take profit. Now I need to take a step back. This ain't the breaker. This is a mitigation block, because we have not swept previous high. So this becomes our mitigation block. This trade netted me 4,000, and we need to hit 10,000 to pass phase 1. In the next trade, you'll see my thought process behind my risk management. When most people try to trade retracements, they enter too early, get stopped, enter again, get stopped, enter again, get stopped. And when they finally get a trade, they round trip it because they hold it for too long. In this breakdown, I'll teach you how to time retracements and a mechanical way to find out where retracements will likely end. we can see a beautiful SMT at the weekly lows between EU and GU. To confirm this SMT, we'll need to zoom in. By the way, I know I use SMT a lot, but I don't even trade without it nowadays. If you guys want an in-depth masterclass on it, let me know down in the comments. The ideal confirmation would be what I've taught you in the previous examples, but we don't get that right here. What we do get though is a sweep of previous week's low into a huge displacement back into the range on the lower time frames. Now to understand where we can retrace to, we need to mark out the range, which is this high to this low. And 50% of this range is a strong algorithmic area where price would likely retrace from. So we can anticipate the next daily candle to open up right here, manipulate a bit down to bait the MPCs, but we're smarter than target 50% of the range. Pay attention right now, I'm gonna give you some crazy sauce. So we have rebalanced this fair value gap with a sweep into displacement. By the way, you can make a whole model of what I've just taught you right here. The sweep of a previous high inside of a fair value gap. Note that down. We already had the manipulation happening right here. If price wanted to continue down, where would it go down from? Yes, this newly created fair value gap right here. But we did not do that. And when we displace above the previous high, that becomes our breaker pattern. We know that we have this breaker pattern. We want to see longs from here to 0.5 of the range, as that is a strong level where price will likely retrace from. So you've learned that now too. Well, how can you confirm that price is likely to expand right here to our draw on liquidity? SMT. If you don't use SMT, you're missing out on so much, man. I'm telling you right now. GU sweeps this low right here while EU fails to do so. Then we're going to zoom into the lower time frame at the 8 a.m. candle, which is a key time. And I'm going to keep GU on the right hand side because I'm going to spill some more sauce. Wait, GU sweeps the lows again while EU fails to do so. Is that another lower time frame SMT? Yes, it is. It's so overpowered. Then we close above the previous high. Yeah, this is the last sign. First of all, the SMT right here with the hourly lows. Then another SMT with the previous hourly candle. And then another confirmation. If you're crazy like me, you see me catching these high RR trades, you can even enter earlier because we already have the manipulation, we have the 3-minute breaker, etc. And for this trade, I targeted 3 RR because I needed 6 bands to pass my challenge. And of course, it instantly hits my TP. Here's the proof. First trade, we made 4 bands. Second trade, we made 6 bands. And I'm gonna give you all a jam right now. Be careful when you trade because prop firms can slip you even at your TP. Make sure you TP a bit above your profit target. Like you can see what I've done right here, 0.27% above my profit target. This is just a R piece. You already know how I'm rocking. And I want y'all to rock the same as me. No diddy. That sounded crazy. But for real, I need you to note all this down, backtest it, and change your life. The trade that passed my challenge happened 2 days after the previous trade, so you'll learn how to confirm when price is likely to start its next phase of delivery, so expand to our draw on liquidity. Let's do a quick recap of our bias. We had swept previous week's low and displaced back into the area where we were likely expecting price to retrace to. So now we are looking for confirmations that price continue its bearish order flow. What confirms the next expansion is this SMT inside of a daily fair value gap, one of my favorite signatures in price, so note that down. GU fails to sweep the high while EU sweeps it. To confirm my SMT, I'm looking for a fair value gap to be breached, which becomes my breaker pattern. As you can see right here, high, low, that rebalances this fair value gap. Higher high, baiting everyone to long, lower low. Now we know our reversal is likely to happen because we have the SMT, the breaker confirmation. I patiently wait for my trading hours. So what did I just see? The most beautiful SMT inside of the breaker. EU sweeps Asia highs while GU fails to do so. Immediately my eyes are going to the next hourly candle. I want to position myself in this hourly candle based on my data. This hourly candle gives me so many free wins, is actually insane. So a quick jam, just focus on the 3 a.m. candle and enjoy life. We have the beautiful SMT. Now we just need to wait for price to confirm our sentiment, which it does with a M5 unicorn. They can set your limit at the breaker and bang, obviously it instantly hits 2 RR. I risk 1.7% to pass phase 2. I was actually going to only aim for a 2 RR, but then I saw price closing extremely strongly through it, so I extended my TP because this model is one of my highest probability models and there's a very high chance to reach high RR. And I'm gonna give you all some psychology sauce. What do you want? A high win ratio with a high RR and trade less per week? Or do you want to lose your mind, trade every day with a lower win ratio? So study the expanding candles and you will see that what I've just taught you is the truth and you need to apply it. Don't just listen to me and watch another video. No, rewatch this, apply everything and change your life. I want to see you win, bro. 2026 is ours. We're almost at Q3. Like, you got to change your life, gang. You can't be living like this all your life. I just gave you the blueprint. Come on, twin, change your life. We've covered how you can get banger trades, but you also need to know what price likely heading to before reversing. Otherwise, you'll just round trip all your profits and we don't want that to happen. So check out this video on the screen next where I'll show you how to find logical targets using standard deviation projections. That way you'll know where price is reversing from so you don't get blindsided.